Today in the crypto space, we see the market showing stability at critical levels. Bitcoin right around that $101,000 mark. Ethereum back to about $4,000. And the rest of the crypto space is pretty much a mix of green and red, nice and stable, showing strength. However, guys, is this the opportunity where we do see the market take a dip so we can buy and accumulate? Or are we going to continue to the upside here with some strength? In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator. But more importantly, I want to talk about one project that a lot of people are talking about. And of course, that project is called ALEPHIUM. So you know what? Let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike and let's get right into it, guys. If you're new to the channel, welcome. On the channel we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with this market. We do see the market a little bit confused in the sense that we're not given a clear direction at the current moment. I still believe that the market is in hard mode, right? As we see Bitcoin and the rest of the market hesitate at the $100,000 mark, you know, it doesn't show strength. If it was meant to break out, it may have already broken out. The reality is we could still break out and do very well. But what I'm seeing here as far as indication is that the trading volume, it keeps on dipping. Now, yesterday, while we were moving to the upside, not yesterday, but the day before, we were moving upwards, we saw the trading volume fall. Then all of a sudden, we took a bit of a dip. And as we were dipping, the trading volume, in fact, started rising a little bit and going sideways upon the dip in market cap. That's not a good look. Ultimately, today, we're seeing the market cap rise once again just a little bit while the trading volume continues to dip. So it seems like, honestly, it seems like the market is not interested in the market cap rising. Now, it is rising. We see capital inflows. However, there's no volume. There's not a lot of market participation here. So the sustainability of this run up or this price action is questionable. And because of that, I remain very skeptical. You know, it doesn't mean that I'm selling off or doing anything crazy here. I am not. I am waiting patiently for this market to give me signals of what I should be doing next. Because in the meantime, I want to make sure that, you know, I'm not losing capital here playing around with this choppy market. Choppy market means that, you know, it's hard mode. And technically in choppy markets, that is when the majority of the market gives back all those gains, right? And you don't want to be one of those. So we want to be very protective of our gains, protective of our initial investment, our capital, because ultimately that's the way we remain profitable. All right, guys, so let's continue going down. Let's see what's going on here with the top 100. We'll take a look at Bitcoin as a leading indicator, and then we'll talk about the project for today. And of course, it's ALEPHIUM. Guys, we know that you guys know that I'm bullish on ALEPHIUM. It's been a while. It's been a while since I talk about ALEPHIUM, given the fact that, you know, I was able to accumulate at a good level and just lock and load. Lock and load, no emotions. There's no need for a video if we're lock and loaded, right? So now that we've done what we needed to do on ALEPHIUM, we're due for an update. Okay, so stay tuned, guys. We'll talk about ALEPHIUM in a second. But like I said, let's scrape to the top 100. Then we'll take a look at Bitcoin, and then we'll jump into ALEPHIUM chart. Bitcoin is going sideways, guys. Not doing much. Is it a bull flag? Maybe. Yeah, it looks like it here on the 1 hour time frame. It looks like a nice bull flag. Or does it become a Bart Simpson to the downside? Well, the reality is that the trend is your friend. We have a bullish bias, big picture. But on the lower time frames, we have a bearish bias or an indecisive bias. And this is where things get ugly because you don't know where the market is going in the immediate short term. But I do know that momentum is dipping. And as momentum dips, I don't like to get actively aggressive in a bullish stance when I see momentum actually coming down. Okay, so this is something to consider. Ethereum also looking pretty good with this bull flag, as we got a nice impulsive move to the upside. We're now flagging out a little bit. Do we see a continuation to the upside? It's very, very possible here. So trading the lower time frames right now might be in your favor, because ultimately, if we do get some strength, you want to capitalize on that move. But again, the bigger picture on the daily, I'm not too convinced. XRP right now is doing pretty good, up 2.5%, more or less 3%, doing great. Solana rolling over still. BNB kind of, doing its thing, maybe looking for a breakout, but it could continue rolling over here. I'm not crazy about it. And you can see the fractals here. Even Chainlink is rolling over a bit, even though it's up 4.2% for the day, which is very, very healthy. It looks like it made a bit of a top. I'm curious about the divergence, if it exists here on these tops. And you can see a bit of a hesitation here on a lot of these projects. Sui still showing strength. It has been showing strength, guys. So something to consider. And lower highs, confirmation highs, basically all over the place. Uniswap, we have Pepe looking, kind of like symmetrical triangle-ish, perhaps even. And we have Hyperliquids continuing to move to the upside, looking very, very strong. Aave rolling over maybe. Maybe hang time is going to start kicking in. We have CRO looking a little bit heavy there. And Matic also grinding to the downside. So you can see that the market is very indecisive. Even Phantom, you know how bullish I am on Phantom. Would I get into a fresh long on Phantom right now? I don't think so, guys. I don't think so. The reality is I need confirmations of all of what's happening. Until I get confirmations, I'm taking too much risk. And of course, risk is public enemy number one for a trader. And it's very important that you get in at a healthy risk to reward ratio. Now, if we do get a decent retracement in this market and we see a little bit of pain where we see the fear ingredient that's kind of reset a little bit, then it's time for me to get risk on. At the current moment, my bags are pretty packed here. I have some cash on the side ready to deploy, and whatever happens here, I'm happy, because literally my bags are packed. But ultimately, if we do get a dip, I have cash ready to deploy, and that's a good feeling, because you're happy either way, whether we go up or down, it doesn't matter, and you're happy either way. And I'm long-term bullish here for this bull run. So even if it does come down again, but buying the dip is a great feeling. It's a great to go shopping and accumulate a little bit more here on some of the projects that I'm interested in accumulate more of, such as Thorchain Rune. It's going sideways right now. If it comes down, I'll be buying the dip 100% on Thorchain Rune. Even Beam, I would love to be buying a nice buy the dip opportunity on Beam. I kind of regret not loading up even further, but it's okay. I was able to pack a decent bag at the bottom, and that's that. So I want more. That's the thing, guys. If you want more, guys, I would be waiting for dips, and dips are meant to be bought. So ultimately, this is where we are with the market. Do we keep on going down, or do we keep on going up? Where do we go here? And of course, we wait for signals, we wait for confirmations, and then we make decisions. All right, guys, I know you're here to talk about charts, so let's begin. Let's see what's going on with Bitcoin real quick, and then we'll jump into the ALEPHIUM chart, because technically, ALEPHIUM as a small cap project has a lot of gaining possibility to, and lots of good moves to the upside in the upcoming for the rest of the bull run. So the reality is how much should we be putting into ALEPHIUM to expect our portfolios to explode? And ultimately, Bitcoin showing us this strength is pretty good as well, because we can see that there's still life in this market. Let's take a look at this in a little bit more detail. Bitcoin showing life here is great, guys. It's super good, given the fact that it's still respecting the trend. But again, I am not looking for fresh longs. The reason why I'm excited on Bitcoin is because I bought Bitcoin nice and early. I bought Bitcoin. My Bitcoin entries were down here, right down here. Now, even lower, in fact, even lower. I got in right around here. My average entry was right around here. So I'm okay with that. But if you guys recall, I sold my Bitcoin that I bought for this cycle, and I bought some really good altcoins. I bought Sui, I bought Solana, and I bought many others, because I'm risk on right now. I feel like we should be taking risk. And that was one of the best decisions, next to selling my Ethereum for Phantom. So the reality is that I'm in a good spot right now with regards to where the market is. And if you look at Bitcoin, based on that, would I be taking risk at the current moment on this price action? And if you look at what's going on with the actual momentum, you might say, you know what, Mike, maybe I won't be taking risk. Why? Because ultimately it's looking too strong. And when things look too strong with a massive impulse, and then you look at, the indecision that we got here, which is quite a bit, you might say, okay, even if it does pop up a little bit more, what about if, in fact, it does eventually roll over with that divergence that we see in play? And the divergence eventually, statistically speaking, should get some follow-through eventually. We don't know when. We have to show some patience here. But as we clearly see, there's higher highs on the price action, clearly upward sloping, while every indication of momentum right now is looking bearish. The purple momentum line is coming down. The expansions don't look as strong as they were, even though we're making higher highs on the price action. And if you look at the momentum as well, we still maintain that bearish divergence, and we're still with the EMAs facing down with red histogram bars. I'm not feeling this right now. It's deviating. The momentum and the trend oscillators are deviating from what the actual price action is doing. And at any moment now, we might see, you know, this type right here, we take the stairs up, and then all of a sudden, we take the elevator down. And taking the elevator down for me means coming to about 87,500, maybe coming down to about 86,500. That for me is a level of which I'm willing to start taking some major risk again and start getting into some positions and preparing for a massive run. The problem is that we also have a volume gap below that could cause it to actually overshoot and come down even further, hitting about 77K. Is that a possibility? 100% it's a possibility. Do I think it's a high probability? No, I don't think that. However, I have to keep this in mind because just in case that happens, we need to be prepared. Now, if you look at the 4-hour time frame, you can see all this artwork. Let me just kind of clean it up a little bit before we get into the 4-hour. You can see that we are definitely respecting this trend to the upside. Now we're here kind of hesitating. Do we go up for a higher high? Do we come down for a lower low? What do we do here? And you can see the momentum is in the chop zone. You can see that even the trend oscillator is in the chop zone, kind of going sideways. No clear direction. Where are we going? Up or down? We don't know. At this moment, we don't know. We do have indications that we're in a bull trend. Obviously, we have indications that the price action is rising upwards nice and slowly. But with regards to momentum and where the market, participation is focusing on right now, there is nothing. This is all very low volume moves, all very indecisive momentum. Either we're in the chop zone, guys. And this is why I decide to wait and see what happens. The likelihood is that we kind of chop around here until we make some decisions. And until I see signals of a decision, I'm going to be hanging tight here, guys. And I'm going to be focusing on opportunities, finding and preparing opportunities for when we get that signal. All right, guys, so let's take a look at ALEPHIUM. ALEPHIUM is definitely one of those opportunities. Now, the question is it an opportunity right now? Guys, I just want you to reflect on this chart at the current moment. Guys, we've been talking about ALEPHIUM for a good while. Guys, I've been talking about ALEPHIUM right into here, into this descending wedge. When it came on got on my radar, I was very clear about my position on ALEPHIUM. We ran up very, very nicely. We started making a bit of a structure here. This was a decent level to pay attention to ALEPHIUM. Why? Because this accumulation zone, guys, if you know my language here on these charts, yellow boxes mean accumulation. Green arrows are good support levels to DCA and buy the dips and accumulate. And obviously, we start looking at red arrows for resistance, which we really didn't get there yet. But we can definitely respect the fact that we are still, or we were in a structure that does represent accumulation with all this volume right here. Now, I just want you to roll back time and start looking at the last time I talked about ALEPHIUM was about 3 months ago. I don't think I covered it earlier than that because ultimately 3 months ago, ALEPHIUM was right here in this zone right here at the bottom of the range. And at the bottom of the range where you have your invalidation, which was if we made a lower low, that meant that, your invalidation got triggered. And ultimately, we're coming down for a lower low where we come down to extension levels. But guess what, guys? When you see good, healthy, risk-to-reward ratio opportunities, those are the areas of which you should be taking risk. Why? Because you can put a stop loss right below and cut yourself off just in case. And guess what, guys? Not only did ALEPHIUM hold up here on a nice double bottom, not only did ALEPHIUM break out of this level right here that acted as resistance based on these tops, and you can see that we had a bit of a volume gap that kind of got respected, and this bottom and all of that. But we got a bullish partnership that caused the price to fly. Now you can see that the price did fly. We broke above the 200 daily EMA. It broke above the previous high, and it made an established higher high with, at the current moment, not classified as a swing failure. Now we hope that we can maintain this position. We hope that we can maintain this area and flag out here. If we break down below this level, it starts to look like a failure where we start looking for horizontal levels of support on the way down. Now, of course, I want to talk about the bearish scenario. If we do break down here, and if Bitcoin takes a bit of a dip in the next little while, the question is ALEPHIUM going to retrace and come down to levels? And it could be. The first level for me is $1.76. Why? because this is a good level of volume that spikes quite a bit. We also have the 200 daily right around this level that could act as support. And then obviously we start to look for confirmations when if we do come down to these levels, how much of the liquidity are we going to hunt in this zone? And what we want to see is that the bulls are going to hold up, and we want to see some sort of bounces, some sort of structure that we can build at lower levels once we retrace to get that little bit of a floor price where we can put a stop loss underneath and expect it to run again for another move. Now, I'm talking about the bearish scenario, a retracement coming down for a higher low. Is that possible? 100%. 100%, but only if we break below this thick white line. If we remain above the thick white line, I remain very bullish. And the reason being is because there's very little resistance above. As you can see, above this zone, we start to see a diminishing amount of volume. This diminishing amount of volume allows the price action to fly right through a lot easier, and ultimately reach all-time highs and price discovery. And the break of this W structure, the target, in fact, is right around $3.25. And the reality is this is where the psychological tops kind of, come around into play. So we got to prepare for that. Now, ultimately, guys, we're going to talk about percentages and stuff in a minute, but I would definitely want to put some emphasis on the structure. A structure right here would be super bullish, even on the 4-hour. Get on the lower time frames, you can see that structure is forming. You can get in. If you didn't get in at the bottoms, unfortunately, yes, you have to get comfortable buying into bull flags. Right now, we are hoping that we flag out here. If we get another couple touches of support, you can get into a position here, put a stop loss underneath the flag, and expect this to be a continuation to the upside, hitting that $3.25 mark. Now, based on the fact that we're trading the 4-hour, once we get to 325, you have some critical decisions to make. Are we going to be taking profit, or are you going to expect a rejection to come down and backtest the breakout zone, which is again back down to about $2.21? All of this is very possible. The problem is that because your entry is here and not down here, you run the risk of getting backtested. Entries right here have a higher probability of getting backtested if we do break out than the entries down here. A lot more support. The possibility, the reality is very unlikely to see the price come down here again. Okay, based on the stance that we are in, the overall sentiment in the market. Guys, we're in a bull run. Deep retracements down to 886 retracements don't happen that often, right? So we got to keep that in mind. So again, this increase in volume, look at that, guys. You can't deny that this was the signal for accumulation. What do you think all this market participation was doing down here while the price was hanging around? Guys, go check out that video that I released 3 months ago, guys. I made it very clear that this was an accumulation range. And this is why I said to buy the dip. Now, all of a sudden, you have to find your second best option, which is buying into a bullish structure, which would be a bull flag. Okay, let's take a look at some percentages here for a second. Just to be clear, there's some people that at the current moment are up 150% on their entries. Okay, so that's something to consider. More or less, let's say even 75 to be modest, right into that range if you accumulate it. Okay, that's still really good. Now, what do we do from here? If we continue to the upside, risk gets introduced again right about this level, and you're up only 37%, which is still a good gain, still a good move. But again, what about a rejection? So you have to be clear that if we invalidate, your risk to reward ratio has to support that trade. Enter right now, stop loss underneath here. Let's put it right into there. TP right into here. You get what I mean? You're up 34%. The risk to reward ratio is 3.5 to 1. All very healthy stuff. The question is, what do you do when it gets to this level? And ultimately, it's about getting defensive on your gains. If we get a structure, bonus, another structure. Trail up a stop loss, put the stop loss underneath the structure, let the rest run to the upside, maybe take 10%. That's also very possible. Take a bit of profit because you never know if we do get that rejection. But like I said, the likelihood of getting rejected just based on the ALEPHIUM chart is very little based on the volume, guys. It's all dependent on Bitcoin, because Bitcoin rolls over. That's going to be a different story. Okay, so we are in a good spot here for ALEPHIUM. The problem is that fresh longs are taking risk, and you have to mitigate that risk with the structure. Okay, so let's take a look at oscillators here for a second and see what's going on here. Let's expand this. Let's get on the daily. Because it's a small cap, we got to really focus on big picture structures here. Now, if you look at the momentum, do you think that this is a healthy time to start buying? Guys, look at the probability. Now, I want you to be very clear about, where's my green arrow? I know I had one. Let's see if it's on the 4-hour for a second. No, it's not. Okay, so no worries. Let's get back on the daily. This is the zone that, that should worry you, because the reality is there was an opportunity down here to get in at oversold conditions, and you can see this is the zone of accumulation. Oversold, the expansion was really expanded down in oversold conditions, and then all of a sudden we saw the momentum grind very nicely, and then all of a sudden, boom, follow through. Now, I want you to reflect on what Bitcoin's doing as well. Bitcoin is doing a very similar thing. I'm not going to go back to the Bitcoin chart, but guys, I'm going to be live tonight at 8 p.m. EST. We can go over all of this again and do a nice comparison. But you can see that there was divergence, bullish divergence right into here. It didn't get its follow through. You know, people were doubting that it was going to continue. And then all of a sudden it crossed the 50, the chop zone, and boom, the rest of it went straight up. And the majority of it is when we got in closer to overbought conditions. The green expansion went full force. Everything is very overbought right now and very overextended. So getting into a fresh long, you can see it clearly is very risky. And you can see that we also have a scenario here on the trend oscillator. Trend EMA is facing up. Everything is looking a little bit risky right here. You can see that very frothy and very bullish. Now, we could get moves to the upside, but you're going to have to do this on the lower time frame, because the daily right now is telling you no, absolutely not. So if you get in on lower time frames, you got to get in and get out like a ninja, or at least put stop losses at levels where you can, you know, ensure some gains and not, you know, put your capital at risk. Super important. Now, if we continue going down, let's go on the 4 hour and see what's going on here. You can see that the momentum is in the chop zone right now. What's interesting to me is that we got support in the chop zone before, right here, and now right now. Every time we went up for another higher high on the price action, we also got a higher high on the momentum. Very strong, very, you know, very nice price action. However, now that we're here, could we maintain and be confident with the trend being your friend? It starts to get a little bit, you know, serious now, because the daily is overbought, and based on overbought conditions on the daily, it could be that finally we see the momentum on the 4 hour get oversold. And look at the indecision on the volatility line. It's not like before. Nice pumps, hesitate, dip, pump, hesitate, dip. What about this? Look at this mess. Indecisive, not clear, emotional. No, thank you. Right? You got to really be clear about this. EMA is facing down, red histogram bars. Okay, if we've done it before. Do we continue down? As of now, we can assume that we do. The EMAs are open with red histogram bars. A bit of divergence here, maybe. Let's see. No, convergence. So totally, you know, negligible, but still bearish. Okay, so definitely bearish because the EMAs are facing down, and we see that the expansion, you can see the purple expansion right now is light purple, and everything is kind of on the downside. So what do we do here, guys? Is it time to take risk on ALEPHIUM to the upside? If you plan on getting bullish here, the key here is to play this structure. Get a few touches, put a stop loss underneath the structure, and expect a continuation. If it does roll over based on that bearish divergence that we're seeing here, as you can see, we're diverging a little bit here. It's not so much bearish divergence, it's literally just the momentum maybe getting its reset. If we get that reset, full reset, it's going to come down. But my biggest concern, again, is the daily. The fact that we did very well. So, again, it's about risk to reward ratio. If you lose this trade, take a small loss and then reevaluate, because ultimately the daily is the problem right now. I'm hoping that we can maintain and go sideways with this bull flag so we can maintain a continuation pattern. But if it doesn't, you don't want to risk too much and put too much on the table here, because really it's about protecting the gains here for the continuation up. You don't want to run out of capital for this bull run, guys, because we want to make sure that we have enough so that we can totally take advantage of all the bullishness that's yet to come. All right, guys, so if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one, and don't forget, buy the dip.